Subscribe to my channel Report Stock.
Okay, let's unpack this. We're diving into U.S. Global Investors' fiscal year 2025 performance. Now, at first glance, you see a net loss, and it might look like a straightforward story of challenges. But if we dig a little deeper, it's actually a fascinating window into global markets. It really reveals how, shrewd companies find opportunities even when the broader economic currents seem against them.
Yeah, what's fascinating here is that beyond those headline numbers, this report offers some crucial insights into how companies like U.S. global investors aren't just reacting to volatility, they're strategically positioning themselves, really looking for significant growth potential in, well, specialized sectors. So our mission today is kind of to explore the underlying dynamics that shaped their year and maybe reveal some surprising investment themes for you.
Okay, so on the surface then, the numbers, they definitely paint a tough picture for fiscal year 2025, right? We're talking a net loss of $334,000, operating revenues down 23% to $8.5 million, and average assets under management dropping too from $1.9 billion to $1.4 billion. How do we square that with finding opportunities?
Well, if we connect this to the bigger picture, the CEO, Frank Holmes, he described markets in fiscal 2025 as, and I quote, among the most difficult to navigate in recent memory. He specifically points to the prospect of sweeping tariffs creating this widespread uncertainty. Plus, those persistent concerns over growth, profitability, inflation, they were really weighing heavily on market sentiment. It was a genuinely challenging period for many.
Right. Yet, amid all that turbulence, the sources also highlight something else. A remarkable rebound in U.S. equities from the April lows. That kind of underscores a resilience in the American economy, doesn't it? How can we interpret that alongside such difficult market conditions?
Exactly. That rebound is a critical point. It tells us that even when the overall climate is stormy, specific areas can show surprising strength. The real insight for you, the listener, is that this resilience often signals where new opportunities might pop up, especially, for those actively managed funds that are looking beyond just the broad indexes.
Okay, here's where it gets really interesting, I think. Let's talk about gold. It seems to be shining particularly bright in this environment. More than just a commodity, maybe.
Oh, definitely. Gold prices have indeed been surging. And get this, gold stocks actually outperformed the S&P 500 through the end of August. Frank Holmes recommends a 10% allocation, split evenly between physical gold and high-quality gold mining stocks, mutual funds, ETFs, like their GOAU fund, which, by the way, just launched in Colombia back in May 2025.
So why gold now? What's the driver?
Yeah, that's the key question right
Yeah.
there. It seems directly tied to a couple of big things. First, the U.S. national debt soaring to $37 trillion. That means record interest payments. And second, China is actively encouraging BRICS countries, Brazil, Russia, India, China, South Africa, plus the newer members, to de-dollarize. That kind of move could really shift global financial dynamics, and naturally, it bolsters demand for alternative stores of value, like gold.
Okay, so from gold's sort of ancient role as a financial haven, we pivot now to what feels like the absolute cutting edge, the future of defense and technology. It's quite a contrast.
It truly is. They launched this ETF in December 2024, the U.S. Global Technology and Aerospace and Defense ETF. Its ticker is WAR. And it's designed to capture a really significant transformation. This isn't just about, traditional rearming. It's a profound tech-driven shift. Think AI, semiconductors, cybersecurity. These are now just as critical as, say, tanks and planes. Global defense spending hit a record $2.7 trillion in 2024. And NATO even committed to raising its target to 5% of GDP by 2035.
Wow, 5%?
Yeah, it signifies a massive long-term reallocation of capital towards these advanced defensive capabilities.
And for those of us tracking the backbone of global commerce, the stuff that literally moves around the world.
Right. That brings us to the U.S. Global Sea to Sky Cargo ETF, ticker SEA. It focuses squarely on shipping and air freight. And this fund is now listed on the Mexican Stock Exchange, too, expanding its reach. As Frank Holmes highlights, more than 80% of all goods traded around the world is carried by sea.
80%. That's huge.
It is, and it makes the SEA fund a direct way for you to get targeted exposure to that vital, sometimes overlooked supply chain infrastructure.
Yeah.
This is stuff that underpins almost all global economic activity. It's like a real economic pulse check.
It's impressive how they're focusing on these specific, quite different sectors. But what about the company itself? U.S. global investors, their own financial strength, their strategic moves during this tricky market. How did they manage internally through such a tough year?
Yeah, that's a fair question. Despite the headwinds, the company actually showed some remarkable resilience internally. Get this, they maintained a healthy shareholder yield of 9.1% as of June 30th, 2025.
9.1%. That's
Yeah.
significantly higher than treasuries.
Exactly. More than double the 10-year Treasury bond yield at the time. And this is a really crucial insight for you. Even with that reported net loss, their ability to deliver such an attractive return, it speaks volumes. It points towards, robust management and strategic capital allocation. They also repurchased over 800,000 of their own shares. And they've paid a consistent monthly dividend since way back in 2007. All this shows pretty healthy liquidity, right? They had $37.2 million in net working capital. These aren't just numbers on a page. They reflect a management team making deliberate choices to create shareholder value, even when things are tough.
So putting it all together, what does this deep dive really mean for you, our listener, if you're curious about global markets and, well, smart investing?
Well, I think this deep dive shows us that even when the broader market faces big challenges, there are these powerful underlying trends creating opportunities, but often in very specialized sectors. Understanding these shifts, from geopolitical moves pushing gold to tech advancements redefining defense, and the critical resilient role of global logistics, that's key. It's key to spotting where the real, maybe more nuanced action is happening. It's about looking beyond just the headlines.
Absolutely. So maybe consider how global events, things that can often feel quite distant, actually directly influence these unique investment avenues. And here's a thought to leave you with. What other niche markets might be silently poised for significant growth right now? And maybe more importantly, what specific signals could you look for to identify them before the crowd does?
Subscribe to my channel Report Stock.